Howdy y'all, welcome back. It's the weekly wrap-up for May 28th, 2021. Hope everyone has had a fantastic week. It's been just quite lovely here in beautiful Larkspur, Colorado. Lots of 60 and 70 degree days. I got some yard work done, cut some branches down, moved my fifth wheel, turned it around so that so I can get in and out of it a lot easier. So anyways, like I said, I hope everyone had a great week. Kind of a decent week in the markets. We'll get into that in a second. And so let's go ahead and dive into the news as far as what's been going on. Actually, let's start with the market. Alrighty, so let's start with the Dow Jones. The Dow Jones this week looks like it was up about 0.89%, so not too bad. It was kind of choppy again midweek this week. The S&P 500, much better week it looks like. Looks like it was up 1.1%. NASDAQ, looks like a very similar chart to the S&P, 1.91. Dow Utilities, ooh, they were not nearly as good. Looks like they were down about 1.13. And let's take a peek at the transports. And transports looks like they were up about 1.5. So as far as the major indexes, not too terrible. Let's see how gold did. It closed at 1904 for the week, so it was up. Looks like about 1.23%. Silver. Let's see how that did. Looks like it was up about 1.5. And Bitcoin, it's been, kind of just bobbing back and forth the last week or so. So it looks like it started at about 36, maybe 35, and it closed at around 34. So yeah, not the best week for cryptos. I know they've been there's been a lot of news about how they use too much power and too much electricity, but from what I've read, about 85% of the calculations that go on behind the scenes are actually done with renewables or sustainable energy. So again, I'm not a crypto expert, so don't quote me on that. So all right, well, let's go ahead and dive in over to the jobs numbers. They look pretty good this week again. Actual initial jobless claims came in at 406 against a forecast of 425,000. Let's look at last week's numbers. It looks like they held the same at 444,000. So again, looking at the trend, coming back down to December, we were at like 800,000, 900,000 in January, and now we're in the 400,000 to 500,000. So again, market excellent improvement in these jobs numbers. They are looking a lot better. Again, going back to before all this crap started. We had about 200,000 people a week filing for unemployment, and if we're at 400,000 plus, so we still have about 100% more people filing for unemployment today than we did a year and a half ago. All right, let's look at the continuing jobless claims. Came in at 3,642,000 against a forecast of 3,680,000. Last week's numbers were revised down a little bit, but still higher than forecast. So not too bad. And again, if we look back at the historical trend, in November, December last year, continuing claims were 5 million, somewhere around there. So to be down at 3.6 million is certainly good news. But again, if we look back prior to coronavirus, most weeks we were coming in about 1.6, 1.7 was a pretty typical, maybe 1.9. As far as continuing jobless claims. All right, let's take a look at some news. U.S. Core Personal Consumption Expenditure Price Index. Let's read this copy right here. Core PCE prices in the U.S., which exclude volatile food and energy costs, increased 3.1% year over year in April of 2021, following an upwardly revised 1.9% gain in March, and compared to the market forecast of 2.9%. It is the highest rate since the 1990s, bringing it well above the Fed's 2% target. Still, Fed officials have been reiterating that such price pressures, including fiscal stimulus, supply constraints, and rising commodity prices, are transitory. I don't know if I would go with that. I would imagine, based upon the amount of money creation that has occurred over the last year, the Fed is playing a very dangerous game by not increasing rates. But unfortunately, they like to drive the car off the cliff like Thelma and Louise, and then hope they had a parachute when usually they don't. So, all right. Well, the first article I wanted to dive into is the Federal Reserve's ballooning and risky balance sheet. Again, this kind of goes hand in hand with the amount of inflation that we're seeing. This is from Mises.org. And I'm just going to read this first paragraph. The Fed has embarked on a massive expansionary quest in recent years. In 2020, total Federal Reserve assets rose more than 4.2 trillion to 7.4 trillion amidst the pandemic and related government lockdown and fiscal stimulus policies. That was roughly 3 times the extraordinary growth in the consolidated balance sheet for the Federal Reserve banks in the 2008 to 2009 financial crisis. So quite a bit more purchasing from the Federal Reserve. Let me jump back. And in the latest weekly H.4-1 release, total assets were up to 7.8 trillion, rising about $100 billion a month so far this year. So, after the last market downturn, we had a lot of Fed buying of assets, and in recent years they've been starting to liquidate those assets and put them back out into the market. But over the last year, we have our government and the Federal Reserve has just been gobbling up distressed assets, and now that has ballooned up to 7.4 trillion. So it's a scary thing. I really don't know what's going to happen. I have some general ideas on the amount of inflation we'll see and some of the financial carnage that we might encounter. But I really don't want to go out too far on a limb and say, well, this is going to happen or that is going to happen. But I'd like to see some people in control or in charge to actually put forth a plan to get this back under control and paying this down. I know that the president and the administration has been pushing for additional stimulus bills that we just don't have the money for it, and I just don't see how having these stimulus bills, which will at some point in the 2030s we'll have a balanced budget again. To me, that's just irresponsible. The national debt could be what, $40 trillion by then. So let's hope for some saner people to assume some roles in Washington. All right, the next article I wanted to cover is from LouRockwell.com. The title is Inflation, Your Role as a Milk Cow. This is by Jeff Thomas, the international man. And there was basically the article is talking about how we as the populace are essentially the milk cows for the banking business. And it goes through how inflation and taxation essentially rob the citizen. And this was the paragraph I found the funniest. In effect, the individual is used by the banking system as a milk cow. For his entire working life, inflation is carefully adjusted to extract as much monetary value from his labors as possible, while still leaving him capable of continued production. Pretty grim. So I'll go ahead and link this article in the show notes so you can go ahead and read that too. So basically just kind of outlines, with the inflation that we're seeing and, the inflation we've seen, most of my entire life. I was looking back at a article that was talking about, what did retirement cost back in the 50s and the 60s and so on, and, all the way up through to today. And I'll probably talk about that one on Monday. I emailed it to myself so I could come back to it and talk about it later. But anyways, and then one last article. This is, again, talking about monetary policy. This is from Mises.org, and the title is How Governments Killed the Gold Standard. And I just want to read a couple passages here. So it starts out, now it's true that the gold standard did not disappear overnight, but limped along in a weakened form into the early 1930s. But this was not the pre-1914 classical gold standard in which the actions of private citizens operating on free markets ultimately controlled the supply and value of money, and the governments had very little influence. Under this monetary system, if people in one nation demanded more money to carry out more transactions or because they were uncertain of the future, they would export more goods and financial assets to the rest of the world while importing less. As a result, additional gold would flow in through a surplus in the balance of payments, increasing the nation's money supply. Sometimes private banks tried to inflate the money supply by issuing additional banknotes and deposits called fiduciary media, promising to pay gold but unbacked by gold reserves. They lent these notes and deposits to either businesses or the government. However, as soon as the borrowers spent these additional fractional reserve notes and deposits, domestic incomes and prices would begin to rise. Again, more inflation. So I'll also link this article in the show notes also. So that's everything I had to cover this week. Hope everyone had, like I said, a good week. It's Memorial Day weekend this weekend. Markets are closed on Monday. I'll be around if anyone needs anything. I don't know if I'll be sending out my video on Monday or Tuesday. Kind of depends on when my newsletters are published. So, but if anyone needs anything from me in the interim, don't hesitate to give me a call or shoot me an email. If you would, be sure to like, subscribe, and share this with friends and family. I would certainly appreciate it. And I hope everyone has a fantastic weekend. Bye-bye.